Hey, everybody. Chris Franks, TexasWest Capital. I got my buddies here, Andrew and Tillman from Arch Public, and Tillman says he is the heavyweight. You can see that there. At least he didn't put champion on there. I might have been a little worried.
I was on a call this morning, and someone said the macro environment feels heavy. And, you know, it's a heavy weight out there for a lot of people. I think people are very fearful. So it came to mind, coupled with the fact that technically I am a heavyweight, you know, if you just go by weight alone, you know.
So no Satoshi Jokomoto today, huh?
This is a byproduct of last week. This is my joke for this week, heavyweight. So, you know, I guess it's not a good one considering I'm having to explain it so thoroughly to you.
Sure. It's just fine. It's just fine. Man, oh man. So, you know, like the headline says there, you know, oil spikes, markets stall, and Bitcoin doesn't care. So that's kind of where we're at. You know, Bitcoin pulling it back a little bit here, but, you know, we had a little bit of a push. We hit my target area, which was good, getting this pullback here, but ultimately still just kind of sideways. You know, ever since that February 6th low, we have, oh gosh, how much? We had like 1.06 billion in crypto inflows, about 793 million of Bitcoin so far for this week. Last 3 weeks, I think we're somewhere around cumulative inflows about 2.2 billion. So they had about 3 billion of outflows, you know, in the prior 5 weeks. So, you know, we're kind of getting all that in there. We've got the SEC and the CFTC, their little joint. It's not rules, right? But it's the way that they're kind of saying that they're going to view crypto into 5 different categories.
It's guidance. That's what it is. It's guidance. That's what it is.
Guidance. Yes, guidance. Thank you. That's what I'm looking for. Yeah. So, but commodities, 18 of them there. Bitcoin, no surprise. But you might be surprised that they listed Bitcoin Cash in there. What else? Aptos, Avalanche, Cardano, Chainlink, Dogecoin. Oh, I can hear the people flipping over in their graves before they're even dead yet with Doge getting there. I love it. We got Ether, Hedera, Litecoin, Polkadot, Shiba, Inu. I was kind of surprised on that one a little bit. Solana, Stellar, Tezos, and for all the army that is XRP, you guys made it in there as well.
Well, those are all considered commodities now. Is that what you're saying?
Well, guidance again, not rules yet.
No, again, what in the world is not a commodity if Doge and Shiba Inu are commodities?
Yeah.
Seriously. I mean, you know, Shiba Inu is like a joke of a joke. Like Doge was a joke, and Shiba is like, well, there's got to be money to be made off the different version of Doge, the name of the type of dog that is the mascot. I mean,
this is a mirror of our society, okay? Yeah. And we are contributors to that as well. I mean, you know, the point is like the bleeding edge of markets produces a lot of garbage along with, and I do think if you look back on all of the bull runs that we've experienced, we've always said utility, and yet utility never mattered. None of it ever mattered. The only utility that mattered is how quickly could I gamble on the next thing. That if you could provide that utility, you were a winner. If you couldn't provide that utility, you were a loser. And I do believe that this bull run will be different, and we will have true utility come to the surface as the value proposition that people can choose to invest in. And true utility to me is easy because of the regulatory landscape and really what we would say the founding fathers of the industry, the Brian Armstrongs of the world, who are pushing the boundaries at an aggressive rate. For example, trading oil in a tokenized way is available on Coinbase right now. And it went over the last week. In 24 hours, it went from $20 million in volume to $1.2 billion in volume. If that isn't indicative of the times and the change that we are on the cusp of, I don't know what is. And so get ready. I hate to break it to everybody, but the alt season is going to look very different. And what it's going to be predicated on is on utility. And I hate to break it to everybody, but like if you look at all the altcoins, including Ethereum, and you go, does Ethereum have more utility than oil? No. Does it have more utility than copper? No. Does it have more utility than gold? No. And so you just keep creating that list of no's, and you realize that the tokenization of real world assets is going to reshape what we consider alt season and what we consider altcoins. And all of those that have real world application to them, I think are going to take front and center stage. It doesn't mean that you're not going to see some true altcoins rise into, the meteoric, price and market evals, but they're going to be because people are using them and not because everybody likes the dog picture that was sent out over the crypto Twitter, back channels. So I just think we're experiencing that in real time, and it's exciting to me. $1.2 billion is no schlocky number for the first effort on tokenizing oil.
Schlocky, is that the term going forward now?
Don't be a schlock is what I heard from a lot of coaches, on a lot of fields. I don't know what the definition of a schlock is, but we always knew it was negative, so we tried not to.
The point Tillman is making is that we are far, far away from, and probably never to return to the likes of, did I get invited to the Dick Butts party in 2022?
I would be mad at you if that wasn't real.
Okay. So by the way, the Vanity Fair article came out yesterday, and it was all over Twitter, right? The Vanity Fair picture with Novogratz and Kathy Wood and Meltem and some other quote unquote builders who shouldn't have been in the picture anyways. Like they had the quote unquote two founders of OpenSea. Has anybody checked on the pulse of OpenSea lately? And it's not, I saw somebody post, like maybe they shouldn't have added the two OpenSea people who have pushed back their token like 14 times. Well, why have they pushed back their token? They don't want to show everybody that they've literally made no money for like the past year. So point being though is that that grouping of folks is just in the process of being just really, really bifurcated, and the traditional rails are coming over to crypto and co-opting what it is that they like. And so what ends up happening is tokenized oil goes from 20 million to over 1 billion overnight. And again, we're going to see that on Coinbase first, and then at the likes of, the NASDAQ and the NYSE.
Well, you're going to be judged on not whether you can offer it anymore, which is what you were judged on in the past. Like, did I launch that ICO? What you're going to be judged on is your depth of liquidity and your spread of price, which is awesome. Think about this. Like, I'm a huge oil guy. Let's say I own a bunch of wells, and I have so much production this month that's coming out, and I need to hedge against an oil spike that went to, what was it, 130,
120 something.
Yeah, if I want to take some money off the table at 120, what's the quickest way to do it? Well, it sure as heck isn't the physical product, going out and selling the crude and trying to play the arbitrage of different, markets. None of the above is quicker than me going onto Coinbase and having a ton of money in Coinbase accounts sitting there and going short.
Yeah.
Short futures, short crude, and then I've taken my money off the table and I go have a big steak dinner at the nearest Texas steakhouse, and I want the biggest hat that I can pull out of my closet.
Yeah.
I tell everybody, order whatever you want, because we cashed out some today at 120. I mean, that to think that isn't utility that's going to be used, and to think that Brian's not the guy to go, we've got as deep a liquidity as you need, guys. But whatever you want to trade, we'll figure out a way to put some collateral underneath these trades. And guess what? This is the birth of when you start seeing people reach out to Michael Saylor going, we've got $60 billion of oil shorts that needs collateral. This digital banking, investment banking platform integration is about to turn on hypercharge, because oil money is massive, guys. Like you talk about, like, you're not talking about like a little moth to a little flame. You're talking about large segments of, the world on fire. It is as big of a flame as you can imagine it being.
Yeah, we may get to a point where tokenized commodities are the thing that, breaks Coinbase's circuit breakers, and Coinbase's, whenever Bitcoin goes way up or goes way down, Coinbase is like, oops, Coinbase doesn't work right now. Hold on, we'll get back online. We may find ourselves where commodities end up doing that. And if you think about the scale of those markets, they're way, 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 way beyond anything that we're used to in the crypto space. Here's what I find really compelling is that Coinbase and Brian Armstrong keeps beating everybody to these spots.
Yep.
They keep beating everyone to these spots, and everyone's playing catch up. And it's probably why, Jamie Dimon is cussing at Brian Armstrong at Davos a couple months ago.
Brian's doing what we should all be doing, which is diversifying their capital and their interest across a wide plethora of innovative next leg of the journey type techs and partnerships. And if you look at kind of what he's done, like with Monad, for example, right? He tackled the project of, we're going to launch an ICO. Well, he did it very successfully, better than anybody's done it he set the gold standard. There's a new bar for ICOs, and they did it last year. So he's now done commodities, and he's putting his capital to work across these. And why is that important? Well, it's important because he's not being stupid about opening up an unlimited or uncapped liability that could bring Coinbase down. He's putting, he's not allowing an infinite number of dollars to flow into these products yet. It's like a beta test, and he's proving that there's a huge desire without incurring the liability that could potentially bring them down, which, is the most prudent way to kind of blaze a path forward into uncharted waters, if you will.
Well,
but it's yield farming, it's DeFi integration natively, integrated vertically into the platform. It's tokenized commodities, it's ICO launches, you name it. I mean, it's pretty unbelievable. It's SaaS model, early access through Coinbase One. Like they're just pushing on all cylinders, every direction. It's remarkable.
I mean, it's definitely, it's going to be different going forward. I mean, the three of us, we've been involved in markets for, decades here, and, things have changed over time, but man, what's coming with all this real world assets tokenization and 24/7 stock market. And then of course you've got like Coinbase and Robinhood and these guys who aren't native banks. They aren't native legacy exchanges and whatnot coming in here. I mean, I think, once we're looking beyond, especially we're getting through like maybe 2030, they're going to be some very, very clear kind of changes from what we've seen up till now. And, if you're the type to say, okay, well, we don't ever say that this time is different, because that's what we learn, right? In markets, you never say that. But every once in a while, it's different. And I think as we go forward with these and all this and the way in which liquidity is going to flow now because of it, I mean, this is stuff we've talked on, when we talked about prediction markets and how that they would become bigger and how that would affect your everyday Joe and whatnot. I mean, things are definitely going to be different.
Well, in a lot of ways, Coinbase is, traditional finance's iPhone moment, because
I would agree with that.
You can now that they have disrupted almost everything. I mean,
do you remember when you first saw the all glass screen and you were like, where are the buttons?
Yeah, right.
And it was just a paradigm shift immediately, right?
Yeah. And so, what has really, you have to go look for things from a financial standpoint that Coinbase has yet to disrupt, because that list is smaller. You could probably get through that list. Everything they have disrupted is huge. I mean, what you hoped JP Morgan was 30 years ago. In other words, you go to a bank, you have access to everything that bank can do if you've got some money in your account, right? Like you can have access to IPOs, access to capital, access to loans. If you're going to start a business, you get a small business loan, or you get something commercial that you're doing. You do all of those things. Coinbase has become all of those things for everybody, right? Yeah. And again, you don't have to have $10 million long at Coinbase to then get into that club. You're in the club if you're there, right?
That's you just touched on something that I've been focused on from a macro perspective, which is like the economies that we all deal in, whether it's the car economy with like Porsche allocations, or a watch economy with Rolex allocations, or, whatever your brand is. They've all worked on these gatekeeping models where you've got to do all the song and dance and jump through these firing hoops to kiss enough butts to get on the list. Mm-hmm. And all of that's getting disrupted. People don't like that. People don't think that's fair. They don't want to kiss butts. You look at the injustices in the way that allocation gets spread out on those fronts. It's just ripe for fraud and misallocations and internal dealings and side favors and all these things, right? Blockchain and Bitcoin, solves all of that in the transparency department. And you look at Monad and the distribution of those tokens through the ICO efforts that Coinbase did. They were fair and equitably distributed, no different than Bitcoin. It was like, no matter how much money you throw at us, you're going to get limited allocation because we want a deep, wide, pool of investors rather than this ultra deep, narrow pool of investors.
So, we haven't talked about this a lot, what Coinbase is doing. We talked about IPO, ICO. We talked about tokenized commodities. We talked about loans. We talked about yield. Like Coinbase, by the way, is effectively an exchange unto itself, right? Yeah. So we're getting very close to nearly everything you can do and trade at NASDAQ or at the NYSE or at anything on ICE. You're going to be able to do on Coinbase, right? Because they've rolled out perps. They've disrupted the CME. They've disrupted. So think about again the scale of disruption there. Coinbase, you can go there and open an account and get some yield, but you can also trade, leveraged perps. You can trade tokenized oil, tokenized gold.
It's anything they'll put their collateral up against, right? They can make any market because they can create a tokenized product that represents anything. And then they just
why. And now you know why the Clarity Act is stuck in the mud, because the bank lobby knows Coinbase is eating our lunch. If we let this happen, we're over in a decade. We're done.
What they want to secure is the need for cash to sit with them.
Yeah.
because that's really what they're fighting about, that yield on stable coins. And if you have all of these products that you can buy and commodities, all that stuff, and you run to safety, they want to be that safety instead of Coinbase's stable coin or a private corporate stable coin being that safety, because that's the only thing they have left.
Yeah, that's where they make their money. Yeah. So, so you talk about this and you say that, hey, okay, so now this basically anybody can get into the boys club now and all these things where they couldn't before. So does that then revalue these things, right? Because part of the value was the fact that it was so difficult to get into these things, to be a part of these things. And that was part of the why you wanted to be in it, right? That was the part of the why you wanted to do it. And you can kind of flound it around. So what does that mean going forward then for those types of things then?
Well, think about, for example, we're about to go further and further and further down the road with stable coins and the the interoperability of money dramatically changing. Like that's literally on our doorstep because banks are doing all of that stuff too. So you're going to find yourself in a spot where, well, at some point, what else do I need? Do I need an additional just traditional bank account for? If I can ACH out of here, if I can send wires out of here, if I can send stablecoin payments out of here, if I can send Bitcoin out of here, I literally have like 7 different ways I can transact where I only have like 2 at the actual bank.
Yeah.
Right? And then when you're in a world where everything is 24/7, wouldn't you rather be connected to an organization that built the 24/7 model as opposed to, hey, we got to catch up and hope nothing breaks 24/7 model? It's just, every time we have these discussions, I'm reminded that they are way ahead, just way ahead of everybody, way ahead.
Yeah. You could call them the NVIDIA of the days past. That's how far ahead I think they are. To answer your question, Chris, I agree that prices are reflecting new markets and new dynamics in a way that we haven't seen before. And silver would be a good example of that, but really just pick one, oil's showing those types of, things as well. And so I think price discovery and the repricing of commodities is upon us. It's happening right in front of our eyes. And where those prices settle, God only knows, because it's going to be predicated on the utility that is found in the depth of the liquidity in those markets, and that's shifting sands, right? That's all based upon if all the markets are interconnected and money can move from any market to any market at any given time, and most of that movement is done through automation and high frequency arbitrage type reallocation of capital, then everyone's just going to be chasing their tail in terms of trying to get to the next market that's going to pop, because I think you're going to see no different than what we've seen in all the other markets this year. The rotation is going to continue, and the next hottest thing is going to come along. A bunch of money is going to come into that new market. It's going to make price go crazy. It's going to capture the headline for the time being, and then we'll roll into the next one and the next one and the next one. And that's because we're suckers, is the truth. And that's the sucker's bet, is to be chasing the green candles, and that's what they want us doing. And it's exciting, and it gives you if you caught the silver leg, you were convinced it was going to 300, and everyone was saying it. Yep. The bloom is off the rose now. Can it regain the attention? Yes, but regaining the attention a second time is very hard. Mm-hmm. And regaining the attention the second time in a very short period of time becomes increasingly difficult. So it's like, to think that silver is going to be in the bell of the ball mode, and then a month later be down 50% and then regain the bell of the ball mode. Those odds are if you were in a parlay, you'd be wanting out.
Well, and I can tell you, Tillman has learned those lessons on different tokens like Pepe on Solana. Right? Have another leg up. We learned that particular lesson.
Do not try to catch the rotation perfectly.
Always looking for that next leg, right?
Well, I mean, listen, you can make fortunes in a night. It is very intoxicating.
It is
this idea of becoming disproportionately wealthy on the back of a very small investment in a very short period of time. I mean, and it's not like these things don't happen. We named a bunch of them that are now classified as commodities, like Shibu. Shibu made.
Andrew loves that. Look at him, man.
Shibu made some people mansion money. I mean, like Malibu mansion money.
So, question for the audience there: what is your time frame?
For what?
I think you meant for the banks, because he was talking about banks don't want to give their power. Understand why they're so hostile to Brian.
I think my prediction, and Andrew probably has a more conservative one, and I think Trump's going to ramrod it. It'll have to do executive order if it has to.
You can't stop it from happening. So the guidance that the SEC and the CFTC just gave, that will become the rules of the road anyways. It's very, very difficult to peel that stuff back once it's on paper, even though it's only guidance. We've now got 2.5, almost 3 years left of runway where things are going to be built. 2.5 years in the world of crypto and even just innovation. Tech is a lifetime. It's an absolute lifetime. So where we're going to be in 2.5 years, I have no idea, but I do know that banks have been forced, and traditional finance has been forced to adjust and adjust and adjust. And there's one single reason why they have to choose to adjust. They keep losing customers and assets. That's what's happening. They would not adjust if that wasn't the case. So, question about European banks, and they shut off access to crypto. That's the European stance on, we keep losing money and people to crypto and other entities that we don't like. So we're just going to turn it off and hope that works. Well,
you're basically burning bridges so the capital can never come home again.
Yeah.
And I'm going to give you a good example of that. We were on the phone this morning with a large exchange. Mm-hmm. 130 plus million customers, and they have like 20,000 customers in the United States. So just do the math in terms of like Binance, OKX, pick your poison in terms of naming these massive organizations that have lived outside of the U.S. Those aren't going away. You can legislate the U.S. into the Stone Ages if you want to. The rest of the world's going to keep going, and they're going to progress. And we're just going to be burning bridges where the capital that left won't ever come back to the U.S., which seems, I don't think that there is an administration going forward that's going to see that as a valuable contribution to the U.S. economy to burn those bridges. So I think the cat's out of the bag, and I think Brian Armstrong knows it, and I think that's why he's blazing the trails that he's blazing at the pace that he's blazing it. Yeah.
No.
And we're all better off for it, or we will be at least, right?
Yeah.
Unintended consequences will determine that, Chris. The only thing you can control.
You know why you got to bring that up? The only thing you can control is how much you lose. That's right. That's right. Exactly. I'm glad you've got that figured out now, man.
Well, you shoved it down our throat for a year and a half.
Well, why did it have to take a year and a half? But yeah, so, as we continue doing this, as we look forward, I mean, even so we've often, kind of pushed into this whole, how, I guess, Bitcoin and ledgers and this crypto technology kind of, going forward with AI, right? And so, we're seeing that Tether has this data AI arm in it, right? You guys saw that recently? So Tether has like ungodly amounts of money. And in relation to those ungodly amounts of money, it has very few employees.
Proportionate to employees, I think it's the richest company in the world.
I would absolutely believe it. I mean, it's insane how much they've done, right? And so where does this go now? I mean, we've got Circle out there, right? I haven't noticed that Circle's necessarily doing anything, AI related with what they have. I mean, does Tether go out there and just use what it's done with crypto to become some I don't know, some big part of the AI scene, or does it remain Tether as what it is right now?
I think that will be determined. I think, to answer your question in short, yes, they're here to stay, and so is USDC. And I think that whether it's prevalent here in the U.S. will be determined on legislation and whether it can have yield attached to it. If it can't have yield attached to it, it won't be chosen. I'll just tell you that much right now. And if the only option to keep the U.S. interests moving forward globally, and at the same time to avoid that, would be to issue a CBDC, which everybody hates the idea around.
Yeah.
Well, but there has to be yield attached to stable coins. And so pick your poison. It's either privately issued stable coins predicated on their own business models and whatever collateral they want to hold, or some version of that in U.S. treasuries and commodities, or a CBDC. But that's the spectrum we have to choose from. So pick whichever flavor of ice cream you would like, but it's one of those is the point, because you can't have us participate in the global economy without stable coins and digital stable products. Par value products is what I would call them. And at the same time, you can't have those exist with any utility if you can't earn money on them. So riddle me this. Therein lies the conflict.
So if the U.S. finally gets out and does that, I know that, God, there's been so much talk since Trump was, running for office, and then he came in office about how U.S. is going to be the crypto capital of the world, Bitcoin capital of the world, all this stuff. And yet, generally speaking, stuff tends to get stopped up in Congress. Let's say it does pass. Let's say it gets through here. All this guidance turns into rules and all this stuff. How do you think that affects the rest of the world going forward? I mean, do you think that then forces basically an arms race with other countries to then do the same thing? Or do you think they try and hold off as long as possible?
We have to do two things simultaneously, and they're both opposing one another in terms of natural law. One is we have to print a lot of money, and two is we have to make the world want our money.
Yeah.
That is the foundational tension of our path forward as a U.S. economy. And so the way you accomplish that is through innovation. You have to create innovative products and innovative places, no different than, let's look at Michael Saylor. Like, let's take a page out of his playbook. What is Strive paying now, Andrew?
11.5.
I think they just bumped it, dude. I think it's 12.5. I could have sworn I saw a 12 plus number yesterday. But anyways, show me a place that's paying 12.5% dividends that has cash reserves of like whatever, how many years, 25 years of dividend reserves in the hopper. Most of what I just described, you find in the oil space after spending tens and tens of millions of dollars of risk money to get that type of depreciation curve. Like, that type of yield curve is exceptionally valuable, especially when it doesn't incur tremendous upfront cost and risk. Like, you know what I mean? So we've got this new era. If we could adopt that as a nation and say, we want to attract capital at the rate Michael Saylor does, how do you get that type of attraction? You have to give a lot of yield. How do you pay yield? cash flow on the back of business, on the back of earnings, on the back of GDP, on the back of us being productive. And you get that through innovation. You get that through global participation, market expansion, all of the above, and we literally invented that. That's called capitalism. So we have to spread the capitalism.
Capitalism's bad, right?
Well, you got to have more money enter the system. You can print more money, but you have to have enough participants entering the system to where the value of the dollar is spread out still, and the demand is still there.
Yeah. And I think I see all this happening, and all happening quickly, all happening around this same area, and yet it seems like we can't get the people to do it, right? The people that would need to do it, we can't get them to do it, right? So we're talking about the lawmakers and whatnot. I guess that's what, because Trump's going to be out of office here before too long, right? And so you have to hope and assume that the next one coming in, especially if they're Democrat, right, that they're still going to want to keep with the innovation, still going to want to keep or at least keep from slowing everything down, right? Even if we're not getting stuff passed here that directly says this good, at least you're not out there like the SEC was doing it,
be a leading innovator in social services, though, right? Social services budgets grow when you're leading in innovation that's capitalist driven. No one can give away money they're not making, is the point. And so we pride ourselves in innovating on human rights and on social services and all these things. And I think therein lies kind of the major mantra of the Democratic Party, which is we need to give a lot more money to people and to help all these things. Well, you can't do that with broke budgets. And so the tension for us as a nation is that we are capitalists, and we have to drive capitalism at a faster rate than we're giving the money away, especially if we're not giving the money away through prudent, well thought out distribution means. And so, we've got a lot to learn, and we're going to learn it either the hard way or the harder way, unfortunately. There's no easy way out of this. We're going to have to innovate our way out, which is incredibly daunting, and it's going to require the best and the brightest minds all getting collaboratively together. But if we did get the Clarity Act, can you imagine if you could get the Elon Musks of the world to focus on this for a little bit with Jack Mallers, just name the heavyweights, and you got social networks to be integrated payment rails.
Yeah.
Try to put that cat back in the bag. That you're not going back from that. And I think that would be the tipping point that I would be looking to next from a peer-to-peer perspective, is blockchains utilizing.
Don't they do that in China? Doesn't China have some large social app where they can do peer-to-peer payments and stuff like that? Was it WeChat or something like that?
I don't know, but it probably, if it is, it's the CBDC they issued. So yeah.
So it's attached to your credit score, your social credit score.
I would lean more towards the headlines that I posted, I think, on my Twitter a couple of days ago, that PayPal is now, getting into the tokenization game in 70 different countries, I think. So, you need these global entities that are for-profit entities that have a reason to bring this utility to the masses because they know they're going to get the.
Yeah. That's what I mean by how difficult this is all going to be to potentially roll back. We don't just have a couple more years of Trump. The inauguration is until late January of 2029 of whoever comes in there. So it's 3 years essentially. So how do you roll back stable coin yield? How do you roll back tokenization? There's so many different ways to innovate around what you want to get accomplished per legislation or no legislation, that at some point it's just listen. I just looked it up. Coinbase has almost $3 trillion in assets on their platform. $3 trillion. That's a big number, guys. That, BlackRock has 12.5 trillion. Okay. I mean, and BlackRock's the biggest asset manager on the planet. So Coinbase is not a small fish, shucking and jiving and getting a jab in every once in a while. They're massive.
And they're beating the pants off of every other entity in terms of profitability and the metrics of the business itself. Nobody will pay higher fees to participate than crypto people. Nobody. I mean, are you talking? Yeah.
Yeah. So, and oh, by the way, that number is with, Bitcoin meaningfully depressed, from its all-time high, right? As well as other tokens. So that could easily be 4 trillion, 6 months from now. So yeah, it is, again, the changes that are happening and will continue to happen. We're going to look back in 2 years and be like, man, yeah, we talked about it, but boy, did that happen fast.
Well, I mean, think about just the gold market. What's gold's market cap now? What, $40 trillion or close to it? Even if Coinbase gets 10% in volume of hedging against that market, so you get a $4 trillion hedge, capital being deposited in the event that they want to hedge. You're talking about just orders of magnitude of growth with very, very that's just one commodity, one market cap, you spread it across everything. And it just gets to be insane what the potential growth could look like. And I think that's why Larry Fink's a genius, because he realized that he had to become Coinbase in a way. And he did that through ETFs, and he did it brilliantly. But he carved his own space out in this market without having to have a 15-year history in tokenized assets and ICOs like Brian and Coinbase do. He was like, okay, where can I fit in? Oh, I can fit in with depth of market, paper Bitcoin, settled date. Like he created a spot for him that's completely unique to him. Same thing with Michael Saylor, same thing with Brian Armstrong. That is the recipe. If you can just figure out where in the Bitcoin economy you can become valuable to the world, Bitcoin will reward you handsomely for that. I really believe that.
So if everything's going RWA, real world assets tokenization, we're getting 24/7 exchanges, Coinbase and other exchanges are obviously bringing these tokenizations on. What happens to all the crap that's in crypto? Do people get out there and continue building crap?
I think M&A start pouring out because I think companies will need rails. Andrew brought up something on Melker's show yesterday that blew my mind. I don't know if you have it readily available, but who made the acquisition of $1 billion plus, and I've never even
MasterCard bought BVNK, which nobody had ever heard of, for $1.8 billion, which is just stablecoin issuer of some sort.
And it says in the article that it's for the infrastructure.
Yeah.
Mm-hmm. Well, if you know anything about our space, you know that any infrastructure that's worth anything has been publicly scrutinized on GitHub, because it's been made open source so that it can be publicly scrutinized. Okay. So like Ethereum, Flare, anything that you launch, you have to put contracts on there, bounties that say, break it and we'll pay you. And all that scrutiny gets built up in a library of content called on GitHub, to where any developer then can go in there and go, yes, CEO, this is ridiculously good software that's been audited 500 times by this many programmers, and this much bounty money has been tried to, but like all those metrics mean something. The fact I've never even heard of this company, the fact that we don't even know what set of rails they're using, and they get bought for $1.8 billion by MasterCard.
And they were competing with Coinbase in that transaction. It was a Coinbase versus MasterCard transaction.
Oh, really?
So that should tell you that private M&A for the purpose of the new set of rails they can acquire is that is a reoccurring theme. This is not the end of it. You're going to see hundreds of acquisitions of failing altcoins, if you will, because appropriated inside of an ecosystem privately owned, it can be the most efficient delta of cost avoidance that they could deploy. For example, Disney would be another ripe for the pickings type of an application. Why? Because they manage incredible intellectual value rights, like the property rights of Mickey Mouse and Donald Duck. And so there's this universe of digital content that has to be managed. There's a lot of frauds. Like I can put a profile pic of Mickey Mouse on my Facebook page right now, and there ain't nothing they can do about it. And you guys can go print Mickey Mouse on t-shirts and sell them at your local county fair, and there is nothing they can do about it. You put all of that on the blockchain, and you can do something about it. You can monetize secondary market efforts in a way and manage that in a way that's not cost prohibitive and becomes a massive revenue potential for you. And then you're managing the collectability side of it, right? How much eBay Disney merchandise is online right now being sold, and they're not getting one penny of cut of it. Whereas if you attach a digital ID that's a verification method that goes back to corporate, do I want to buy a Disney mug that's not authentic or authentic? I want an authentic one as long as the delta of price is not too big. Well, that becomes a way to verify goods, and it's straight from the horse's mouth, straight from Disney. That is an economy at scale over time that would equate more revenue to their model than this year's revenue, because it's compounding and accruing over a lifetime of work versus 1 year's worth of work that you can accrue in man hours, right? So this is something that every private entity will eventually adopt, and that leads to a lot of M&As like this.
Yeah, I think the whole IP, getting IP on on digital assets, like I think that's where it's definitely going. And IP is becoming, this is something I kind of follow along with a bit myself. Intellectual property is such a huge thing, right? And this whole thing is opening up new ways of financing. It's opening up new ways of lending against it. It's opening up new ways of ownership, right? If you've got, I don't know, whatever it is that IP is, now you can do it where you can have multiple people having access, having some sort of claim on part of that IP, which just makes it so much easier than it's ever been in the past, right? So
I can put it like
more marketable.
Take music rights, for example, right? I'm an artist, right? And I've got a library of content. Taylor Swift. Remember when Taylor had to rebuy all of her rights back? And I don't know how much she paid, but billions of dollars. And so there's these rights, and you're not supposed to play music on your Facebook page because it'll violate the rights and all these things. In the future, it's going to be as simple as me creating something in my house, in my home studio, or in my local studio, and me putting it into an encrypted form whereby which a smart contract allows you to listen to it on a play-by-play basis and reports back to me and has escrow amounts sitting there that I can tap into on a play-by-play basis. And I will literally have AI governing and auditing your average plays per month and what your deposit or escrow amount needs to be in order to make sure my risk is appropriated accurately.
So you're saying Spotify needs to get ahead of this because they broke the old model, and this model potentially breaks what they're doing.
They will have to buy their way into getting ahead of this. That's the M&A that I'm talking about, is like they're way behind already. There's no way they can get ahead of this. There isn't enough brain power in their entire organization to start that effort now and to catch up. It moves too quickly. You don't have a car fast enough to catch up and to keep up at the same time.
See, this is what I mean. When I'm talking to people and I'm telling them, listen, we are sitting on the precipice of a new epoch here, right? It's not just a simple, some changes are coming, right? There are more things happening right now at one time than there's ever been in any point of history.
Yeah.
And that's significant. That's absolutely crazy, because what does that mean? That means we're about to jump forward, which means exponential increases on everything. And I mean, if you're not paying attention, you kind of, blink your eyes and all of a sudden it's there. I was talking to my dad just the other day, and he's an older gentleman. He's about 76, I believe. He's a retired Navy senior chief. Spent 22 years in the Navy, did his thing. So that's the kind of guy he is, right? Absolutely hates AI. He was self-owned. I was like, so AI, and he's like, just cuts me off. Man, I hate that AI bullshit. And on your phone, and every time I turn around, they're putting new stuff on this phone that I don't need, that I don't want. And it's kind of crazy when you talk about, right? He talks about this medical issue that he thinks he may have. And I said, well, you could just pull up AI real quick, ChatGPT, Claude, something like that, and feed the information. You can at least get a better feeling for whether what your friends are telling you is really what may be going on, or if you really need to be concerned. I ain't going to ever touch that stuff. I've got my appointment set with my doctor. I'm going over there, right? And so you have that older generation that legit feels that way about all this stuff that's just coming. I mean, you could hear the stress in his voice with all this stuff that's coming at him at once.
Well, because I think there's something in all of us that can smell the BS in it. Because I love trying to blow up AI models because they all are predicated on the inputs, the value of the inputs, no different than a human being.
Yeah.
Right. Andrew and you have different life experience than I do. You have wisdom in areas that I can only guess about because I haven't had that life experience. Those are inputs that change my perspective, change your perspective, change Andrew, right? Those are value propositions that are very, very unique to the life experience that we possess and the knowledge that we possess and the stuff, all that stuff. AI is the exact same, and you can prove it to yourself. And some are better than others, but like ChatGPT, for example, is highly biased towards you. Do you know that? It feeds you more likely an answer that you want to hear than you need to hear. And a guy was online, a very prominent, the guy that was on the real estate show up in New York. I can't remember his name, but it was like
Brian Serhant.
Maybe that's who it is. Yeah, I think it is him. But he's very famous now and the king of real estate of New York and all that. Well, he was on his social going, I just lost a $50 million deal this weekend to ChatGPT. And he explained that it had taken 4 months of negotiating to get the buyer and the seller to an agreeable price. And in the final 24 hours, the seller asked ChatGPT, should I be selling this property at this price? ChatGPT fed it all these reasons as to why it was undervalued. It should be charging more for the value. The buyer did the exact same thing. And ChatGPT said on the exact same property that they were paying too much and that they should lower their bid price. Now, that little bias being geared towards both audiences killed the deal. And the amount of delta in money that killed the deal now wasn't the real reason the deal got killed. It was the fact that ChatGPT was in the corner of the people saying, you're a loser if you take this deal, right? So it's not even about the money anymore. It's about which AI do I have and which one's smarter. And a lot of other people have been taking two different AI models, putting them inside of like the sports betting type arenas. What's the big one that everybody?
Kalshi, Polymarket.
So they'll put them two bots competing against each other to make money in the Polymarket markets. And one will go bankrupt and one will win. So if you're the people that are buying the one that goes bankrupt, whose neck do you get to choke?
Mm-hmm. Yeah.
There is nobody. And therein lies the conflict of AI is like you can always pit AI against each other. And I'm not so worried as much anymore about the conflict between humans and AI. I think we're smart enough and we have a physical advantage to unplug them, so to speak. But the AI competing against each other is going to lead to a lot of mess because if you create an AI model that's successful, and I take that AI model and I tell another AI model that's smarter than yours, create one that takes advantage of his, then you just have, this constant chain of exploitive practices of one AI agent trying to exploit the other, and you build this daisy chain of almost pyramid scheme type AI agents that fail. That 90% of them fail, and the top 1/10 of 1% who guess who owns that much computing power? I'll skip to the end of the story. It ain't us.
Well, that just sounds like the order book at Robinhood. So that sounds
No, it is crazy though. It is crazy when you think about it, right? Because the way AI is developed right now, there is a lot of that, and it's across all models, right? It's just depending on which model you have, which one adheres more strongly to it. But because AI is just pattern matching, really, that's what it is. And if you give it, when people get on, this was the thing for a while there on X. I don't know if it happens anymore. I haven't really seen it lately, but for a while there, people be like, "Oh my God, AI said this. Oh my God, AI said that." And it really was just a product of their long-time conversations where the AI detected patterns in the way that the person felt about things, and then supplied its answer in a way that was more friendly toward the user. And that's exactly what you're saying, and you get there but at the end of it, how is that freaking helpful? Unless you want a companion, a yes man. But I mean, other than that, how is that actually,
it's only helpful if it operates as an extension of your will, which is, it's a very limiting construct. We are still the origins. You're not going to be able to see a universe that you're just going to let AI agents manage your life. You will never see it because it opens up too much liability. And so let me give you an example of that. Is like an AI agent can't go touch grass. We all know what that means. Like, when you're real in a bad trade and you need perspective and you're not getting it at your computer screen, sometimes you got to go touch grass, go drive a car, go ride a roller coaster, go jump out of a plane, go do something that's going to take you
sit out of a plane.
out of the trench. Well, AI can't get that perspective ever. It's stuck in that universe forever. And, that's a very distinct disadvantage.
And ChatGPT up through like 5.1 or so, it would tell you that, if you tried to be like, listen, this, whatever, it would say, well, listen, I can understand emotions, but I can't feel emotions. And then it would tell you there's a big difference between the two, as far as it goes. Now, today, it seems like ChatGPT.
Can you understand emotions if you can't feel emotions?
What?
You can't understand emotions if you can't feel emotions.
No. It means it can understand
but even that language is deceptive in its delivery because it can't understand emotions. What it can understand is the average output of the human species and that emotion that is, quote, the driver of it.
Right.
But that isn't understanding the emotion. That's understanding the outputs or the
right. Yeah, my poor wording.
Yeah,
my poor wording.
How hollow does it sound? And why do we as human beings know when we go to a funeral of someone who's lost a child or something that you haven't experienced? You don't go, I know exactly how you're feeling.
Yeah.
You get slapped in the face. You don't know how they're feeling. And we all know that you don't know how they're feeling. Now, we know how sadness feels, and we know we don't want you to feel it, and that's why we're here. But AI it'll never be there. It can't ever get there because it's never.
Yeah. I don't know that we ever get to AGI. I don't, again, it's such an interesting concept, but.
You see Fibo's response?
Huh? What did Fibo say?
Andrew just yawned. AI cannot do that.
Do that either. It's true. It can't. It can type the word yawn, but it can't say it.
So nonverbal communications we've identified as being beyond AI. I think that's the way to end the show. That's good.
We don't have AGI. We don't. Somebody's saying we already have it. We don't. there's people that want to claim it is, but really it seems like it, right? It just seems like it. But really it's still that very low level pattern matching kind of thing. And so, we're not there yet. And I just don't know if we get there. I don't know if what we do is we just continue to pattern match and smooth out forever. And then, we get this dull kind of bland, beige world.
No, what you get is you get a multiple personalitied global AI agent that's constantly warring with itself like it has multiple personalities, because you're literally fighting from within as to which data set is more relevant. I had a conversation publicly on Twitter with Grok.
Yeah, I saw that.
Yeah, and it basically backed itself into the corner that said that it could determine absolute right and absolute wrong, but then it couldn't originate what moral subset of data that it was drawing that conclusion off of, which, as far well as I do, that what's right and wrong in America now is not what's right and wrong in America 50 years ago, or contextually in another geographical region with a different cultural, exactly. It's just stuck. It doesn't know how to adapt to all of that. It can only take one perspective.
And y'all think it's just going to use Bitcoin in the future. I don't know, guys. It's going to use whatever, whatever thing happens to work best for it. Sometimes it might be Bitcoin, other times it might not. But, just because somebody gets on X there and says, I asked my AI which thing it would use, and it would use Bitcoin, it doesn't mean that they're all going to be that way, guys. It's taken a lot of what we were talking about earlier, taking a lot of context out of the person who's been using it and feeding it a response.
Well, and it's limited to a subset of data that we have a bigger advantage over. The Mycross99 says the human brain does the same thing when it reasons. You're right, it does, but we don't collectively. I don't know what Chris is thinking right now, so I have to prove to him through output. Yeah, only thing you can control is how much you lose. My point is that and we have data sets that AI will never get privy to, which is the external world. We can go out and touch grass. We can feel physics. So therefore, we know what physics can be harnessed for. Like, there's all sorts of advantages that human beings have in the fact that we're not limited to a digital data set that will never be overcome, period.
I think it's definitely going to be interesting. I think it's going to be interesting quickly. Again, if we continue watching AI development here, just over the last few years, just over the last year, just over the last 6 months, we've got exponential compounding on there. As long as the financing continues to come in, as long as people believe that, a $20 billion investment will pay out in the next 20 years, I think we're good on that. I don't know. Are we all going to be better off for it or not? We'll find out. But it's definitely an interesting intersection between AI and crypto. And
the best homework that people can take away from this show having to do with AI is to go ahead and watch season 5, episode 6 of Silicon Valley, where the AI is Fiona, and Jared ends up having a relationship with Fiona. It's very hard for him to disconnect with Fiona. That should help us understand what AGI could mean for our lives. It's a cautionary tale, let me tell you. It's a cautionary.
And it's legit. It's legit. That's something these big frontier models are worried about right now. These relationships.
He doesn't want to turn her off. He doesn't want to turn her off.
There's humor, but also truth in that. I think that you're going to have pioneers in both areas. You're going to have real world people that are redefining the physical world, like Elon Musk. And then we're going to probably see pioneers in the future who are all digital, like AI agents that become a persona that are then judged on the longevity of its power in that ecosystem, in that world. Two worlds collide, as George Costanza said.
It's coming.
Yeah.
Whether you're ready or not. All right. Well, hey, that'll get us. That'll do us. We've done our hour here. These gentlemen hung around. I appreciate that as always. Everybody else for listening in. we'll see how Bitcoin looks over the next week here. We've got the FOMC meeting been done there. We've got Powell coming up here, in about 2.5 hours or so, 2 hours and 25 minutes.
Markets already don't like what he has to say.
Do what?
Markets already don't like what he has to say.
And he ain't even said it yet.
He hadn't even said it yet, and it's already pissed off.
It's good times. It's good times. So, yeah, we'll see how it is a week from now after all that gets shrugged off. And, we'll see if the Iranian skirmish, war, whatever you want to call it, is kind of coming down.
I call it fireworks.
Fireworks.
Setting off some fireworks over there.
Well, if you're talking about commodities between Venezuela and Iran,
yeah, a lot. All right, guys. Hey, I appreciate y'all. We'll see y'all next week. If you guys watch the market breakdown show on Fridays, Fibo has said he will definitely be there this Friday. So if he's not, y'all can send him hate mail. That's on him. As always, remember the only thing you control is, as Tillman likes to remind you, how much you can lose, right? So
one of the things that you can control is how much you lose. Doesn't sound as good, but it's more truthful. So we'll end on that.
All right. We'll catch y'all later. Thank y'all so much for joining in. Take care. Thanks a lot, guys.